recognized.
Mr. Speaker, I rise today in support of H.R. 2396, the Privacy Notification Technical Clarification Act, which is an important bill co-sponsored by a bipartisan group of members of the House, and a bill that was approved by the Financial Services Committee with a strong bipartisan vote of 2-to-1, quite literally 40-to-20. Additionally, this bill builds upon an issue that has a long track record of strong bipartisan support in Congress. I want to thank Congressman Trott, a member of the Financial Services Committee, for introducing this legislation and for leading congressional efforts to modernize the privacy notification process for consumers and to provide regulatory relief for our struggling financial institutions. There is a serious issue, Mr. Speaker, with the sheer volume, complexity, load, and cost of the regulatory burden upon particularly our struggling community financial institutions, our community banks, and credit unions. It's no one specific regulation, but the totality, the combination of them all are causing us to lose a community bank or credit union a day in America. And as we lose them, our constituents lose their opportunity for credit opportunities to share in their version of the American dream. It makes it more costly, more difficult for them to finance somebody to go to college, for them to perhaps buy an auto to get them to work, or perhaps capitalize their own small business. And so we frequently hear from our community financial institutions. I heard from a banker, a community banker in Nebraska not long ago, who explained, quote, "I have explained about how things have changed since I started in banking 10 years ago. In efforts for our government to make things more fair or easier for consumers, it has actually become increasingly more difficult for people to obtain favorable loan terms and not to mention obtain loans in a timely manner." I heard from a banker in Alabama about real estate regulations that said they were intended to help customers, but it's actually hurting them. As wait times increase and banks are no longer offering certain products, not all of these people can be protected from themselves no matter how many rules and regs the banks follow to protect them. I heard from a banker in Utah, a community banker in Utah, who said, "I've been in banking for 29 years. In that time, the regulatory burden has increased dramatically. The ability to help customers and small businesses succeed in rural America has been greatly hampered by regulation intended to protect the customer from Wall Street banks, but in the process, smaller community banks such as mine have been caught in the fray or broad brush of regulations." Banker in Oklahoma said, because of Dodd-Frank regulations, quote, "we no longer offer purchase house loans." And the list goes on and on and on. And so this is one regulation that simply says under the Graham-Leach-Bliley Act that if a financial institution doesn't change their privacy notification, they don't have to send out a piece of paper annually. A piece of paper like this that 99% of the time customers throw away and don't read in the first place. And don't take my word for it. Professor Adam Levitin, who is a frequent Democrat witness before the House Financial Services Committee, testified before our committee, quote, "One thing that I think should go the way of the dodo bird are the Graham-Leach-Bliley privacy notices. Nobody reads them." That's the Democrat witness, Mr. Speaker. It's not the Republican. It's the Democrat witness. He goes on to say there's no reason anyone should, even the large banks, should be spending money on giving these notices. But that's not what this bill does. It just simply says if a financial institution does not change their privacy notification, they don't have to send out a paper notification that creates more cost that gets passed on to the customer that nobody reads in the first place. So number one, it's important regulatory relief for our financial institutions. But it's also important when we think in terms of the sheer volume of financial disclosures that our constituents receive. And this goes back to the fact, Mr. Speaker, that if you disclose everything, you effectively disclose nothing because you overwhelm the customer. And so we must vigilantly ensure that our constituents are receiving effective disclosure, not just voluminous disclosure, but effective disclosure of material items written in clear, understandable, common language. Again, not voluminous disclosure of irrelevant items written in legalese in fine print. That doesn't do anybody any good, Mr. Speaker. And so, again, I want to thank the gentleman from Michigan for his leadership. The bill that he is bringing today has earned bipartisan support because it is a simple technical correction to clarify that customers have to be mailed physically mailed an annual privacy notice only when the privacy policies have actually changed from the previous year. Importantly, this bill was carefully crafted to maintain and retain current privacy and opt-out policies and does not exempt any financial services provider from an initial privacy notice, nor does it allow any loopholes for an institution to avoid issuing an updated notice. In fact, this legislation, Mr. Speaker, does not change privacy provisions at all, just how they're delivered. Let me repeat, the legislation does not change privacy provisions at all, just how they are delivered. Again, Mr. Trott's bill has strong bipartisan support and provides a simple and flexible approach that modernizes privacy notification to the benefit of our customers and to the benefit of our financial institutions. I urge adoption of the measure and urge every member to vote for it, and I reserve the balance of my time.
Gentleman's time is reserved.